Good morning. This is Sheldon here from the Currency Advisory Desk. It seems like 2008 all over again. Just that the characters have changed this time, and it has been evolved to a much bigger stage. We've got, I could say, Lehman Brothers, who's been replaced by Greece. We've got the U.S. Fed, which is being replaced by ECB, and everything seems to be, the wheels have been set back into motion, and it seems to be just being repeated. Now the only question that's running around across everybody's mind is whether Greece will get any support from the euro, or is it that the Greek citizens have had enough to do with austerity and they want to leave. Well, this is something that only time will answer. But however, either ways, whichever way Greece goes, the picture is not that rosy for the euro. We continue to be bearish on the euro versus dollar, because whatever data is coming out of the eurozone, whatever fundamental issues that they have, they just seem to be escalating and getting bigger day on day. Now, in the rupee terms also, as we had discussed sometime earlier, the euro is only holding up due to the dollar, cross relationship, because we derive the value of all other currencies, that is your dollar, the yen, the pound, basis the dollar relationship, we derive the values of the pound, yen, and the euro. So that's the only reason why we see that the euro is holding up, because the dollar has run up spectacularly against the rupee, that is. Now the dollar index is presently trading at 81.44. It's a bit lower compared to yesterday. However, in rupee terms, we saw that the dollar is scaling much higher up. In fact, yesterday we saw that the dollar has given a close of around 54.49, which is quite a high level. And we were expecting RBI intervention. We were expecting more shorting of dollars at this level. However, there wasn't any much action from RBI on the front, though there are rumors going on in the market that RBI has intervened or they will intervene, but we're not seeing the run of the dollar being affected. Neither is the momentum being changed of the dollar against the euro, against the rupee, that is. Hence, we maintain our fundamental long call on the dollar. However, right now we might see some profit booking. All the long positions that were there, we may see some profit booking on these positions, and hence the dollar may come down. But that will just be a momentary phase. It won't be a long-term phase, because long-term the view of dollar is upwards itself. We got some data from UK also. Yesterday, the unemployment claims reduced as per the data. It came down to around 8.2%. This was in a way supportive for the pound. However, we are bearish on the pound, and this view has been reinforced by yesterday the Bank of England governor, Mr. Mervyn King, his statement. Well, he predicted a very gloomy outlook for the whole UK economy, and he also stated that the economy is headed for a lot of problems because of the euro region, and the euro problems will escalate, or it will spread on to the UK economy also. Now, in rupee terms also, if we see, the euro is only holding up because of the dollar. Because of the dollar relationship, and the pound also has a similar characteristics with the euro, and it is also holding up based on the same view, that since the dollar is up, the pound and the euro are up also. Now, we had also some information coming out of Japan. We had some data. The Japanese GDP figures for the Jan-March quarter, they grew at a rate of around 4.1% year on year, and at a rate of 1% quarter on quarter. Now, this GDP has been driven by more of domestic consumption, more of domestic spending rather than the exports. Traditionally, Japan is an export-oriented economy, but this growth in GDP, we observed that it was more due to domestic spending. Now, we did a little bit of further analysis in this, and we found out that the domestic growth, what they are talking about, is actually the reconstruction that is going on there. As we know that Japan had faced a series of earthquakes, and there were a lot of problems in Japan. So right now the money that has been put into Japanese economy is going more towards rebuilding whatever was there. So do we take this as growth? Well, that's a big question mark, because it's just that they're trying to get the economy back into, you know, shape how it was before. However, it's nothing new that is there. They're just trying to rebuild their houses. They're trying to get basic services which are needed in the market for you know, livelihood, for sustainability. So we would not term this as growth as such. And further, we are expecting, you know, a trade deficit to come in the next couple of weeks. So Japan will be releasing its trade data, so that will also hit the yen. We see that even though yesterday, you know, the major factor which is supporting our argument is that yesterday, even though the data was positive, the yen did not strengthen much. The yen is still trading at around 80 levels. In fact, if this was true, the yen should have gone to around 78 levels against the dollar, but it's still holding on to 80 levels. And intermediately, we feel that the yen will go up. I mean, the yen dollar will trade up to around 82 levels, and post 82, the Bank of Japan, they have to intervene when it crosses 81, 82. Again, we'll see a strengthening of the yen to 79 levels. So even in rupee terms, the yen seems to be heading southwards itself because of this primary relationship. See, what is happening right now is that the dollar is getting prime focus as, you know, a safe haven instrument, and money is flowing out from the Japanese economy, from the sovereign wealth funds everywhere. They are getting confidence into the dollar related securities, so they are buying dollars, they are buying dollar denominated securities, and yen also as a safe haven investment is not gaining that much of you know, importance. It's gradually losing its importance as a safe haven investment. So on those terms, we can expect the yen to correct. Just ending it with the levels for today. Technically speaking, the US dollar trend is bearish. We are seeing a support of around 53.73 on the lower side, and on the upper side we see a resistance of around 54.51. that's in the spot I'm talking about. Now for the pound, the view is again bearish. In the spot market, we see a support of around 85.81 on the lower side and a resistance of 86.90. And for the euro, the support is around 68.32, and we see a resistance on the upside at around 69.45. And lastly, for the yen, the support is around 67 levels on the downside, and we see a resistance of around 68.32 on the upside. Well, that's it for today. Thank you.